people rolling in, and I'm sure we'll have others to join us as well as we go forward. I want to welcome everyone for today's Small Business Essentials webinar. My name is Shaylin Scott. I am the Executive Director of Founders First CDC, and today's topic is Small Business Secrets of Navigating Capital Stack for Growth, not just for starting up, but for growth. What does that truly look like for your business? So we want to thank you all. Just a quick reminder, housekeeping, any questions, comments in the chat, please make sure you put those there as well. We have a delightful group of participants from all across the nation. I see San Diego and Texas and everywhere coming in. So welcome everyone in this virtual space as we take this hour, and we'll try to get as much information and questions out as possible. So we'll keep going from there. So a little bit about what we'll cover today is we'll have our introduction, of course, of Founders First, our webinar purpose, our introduction to our subject matter experts, a little bit of background information on Capital Stack, what exactly that is, what are we talking about today, an expert discussion, a really open and just honest discussion, none of those hard questions coming up, but a lot of good info, and upcoming webinars and other resources and good things, and a few closing action items and questions. So a little bit about Founders First. We are a nonprofit. We are a nationwide platform that provides assistance to help diverse-led businesses grow and scale. We want them to be million-plus businesses in the industries that they are in. And so we do so through education, mentorship, one-on-one coaching, accelerator program, and on our for-profit side, provide alternative funding as well. So we try to provide wraparound services and everything related to small businesses for diverse founders. So thank you all for being here. And a little bit about what our topic will cover today. Our purpose is to help diverse-led small businesses that can add a variety of funding options in order to reach their growth goals. So that's our overall goal of today. So let's introduce our subject matter experts. Let me move some things out of my way here. First, we have Brian K. Marshall, the Director of Entrepreneurship, BCL of Texas. We have Brandon Hunter, the founder of Roog, and Elaine Swan, the founder of Swan School of Protocol. And I'll tell you a little bit about their bios in just a moment, because we have a powerhouse. I couldn't put everybody on here. These are the three great guys we have on here. So you're in for a treat. So a little background information for everyone who's attending. Typically, when you think of small businesses and starting up, the first thing that comes to mind is, how will we get the funds to start our business? Where does that come from? And there's a variety of different sources that businesses use to start their business. There's personal family savings, business loans, some do credit cards, some use their own 401ks or business credit cards, some do SBA loans, CDFIs, government-based loans, investment by venture capitalists, and a small percentage uses grants. So there's a variety of funding options and capital that's available out there in the ecosystem. And it takes it's up to you to decide on what works best for your business. And sometimes some work better for you than others do. And so this is just a look and high level overview of the source of startup capital when it comes to small businesses. Something to keep in mind in our discussion as well, especially that has been exacerbated due to COVID-19, is some of the negative effects of not having access to capital. And those who've been primarily affected by that are the underserved community. And some of those are Black and African American, Native Hawaiian, Pacific Islander. You can see those statistics. So when it comes to a lack of access to capital, where do you go when it comes to growth? What options are available? Do you know where to go to find the options to help support your business and growth? And what does that look like for your particular industry? Is it simply from one line of funding, or do you need multiples? And that's why we're here to talk about stacking those varieties of funding options that may work for your business. So you've heard me say this before. What is Capital Stack? What is it? If you look it up, it'll give you a pretty in-depth definition of what it is and how it can be used and the variety of options that are out there. We spoke of traditional loans, there are microloans, revenue-based financing, CDFIs, crowdfunding, angel and venture capital funds. There's a variety of options that are available to you. And this is a really high level, clear view of some options that are here. So we'll make sure that you have this to take with you and keep in mind. And we have our subject matter experts who have experience with a variety of these, and they'll be able to give you their take on how this all works as well too. So I mentioned all the bios here. We have some stellar powerhouse participants on our panel today, and we'll start with Brian Marshall. He is a small and minority business expert with 2 decades of industry experience. He's the Director of Entrepreneurship for BCL of Texas, Dell's billion-dollar roundtable supplier diversity program mentor at IC2 Institute of the University of Texas at Austin for the Fast Forward program, founding member of the Dallas Build ecosystem, current chair of Build's Access to Capital and Personal Finance Group. So welcome, Brian. Thank you so much for being with us today. Look forward to hearing from you. Next, we have Brandon Hunter. Brandon is the founder of Rude, which is a mobile marketplace that helps shoppers discover unique products and services from BIPOC community, women, LGBTQIA, and veteran-owned businesses in our local communities. He's an Army veteran, graduate of the United States Military Academy at West Point, Red McComb School of Business, bachelor's in business management, a minor in environmental engineering, a master of science and technology commercialization. That's a mouthful. So welcome, Brandon, so much. Look forward to hearing from you. And last but not least, I always wanted to say this when someone came on the panel. You may have seen her on, mentioned in NPR, Forbes.com, NewYorkTimes.com, Time Magazine, Real Simple Magazine, CNN Money, Men's Health, Working Mother. And I'm pretty sure this is not the full list of all the locations where Elaine Swan, the founder of the Swan School of Protocol, has been featured and asked to provide her expertise knowledge. She's the author of Let Crazy Be Crazy and the founder of the Swan School of Protocol. The Swan School of Protocol is an etiquette training institute that provides professional development and training to individuals, businesses, and corporations. It also offers etiquette licensing and certification. And through their licensing program, they currently have 20 independently owned and operated schools across the US with a newly opened location in Nigeria. So welcome, Elaine Swan. Look forward to it. Thank you so much. All right. Now to the good meat and potatoes of it all, our expert discussion with our panel. So we will start with a few questions. And the first one is the bio that I give for you guys does not clearly give a clear take on your business or your organization. So we'll start with you, Brian. Could you tell us a little bit about your organization and the role that you serve with BCL of Texas?
Sure, no problem. I'm again Brian Marshall. I'm the Director of Entrepreneurship here at BCL of Texas, or Business Community Lenders of Texas. So we are a community development financial institution, but most importantly, we're an economic development organization. So we cover everything from home buyer education, mortgage lending, small business development and education, of course, small business lending, and we are also developers ourselves. So we own about 60 properties, commercial, residential, and then we basically can come into areas, purchase property, and then build housing that also favors low, moderate income is what we do. So we've been around for 31 years. And I will say to Mr. Hunter, I'm Air Force, but that's okay. I'll still be on this panel with you.
It's all right. It's all right.
Wonderful. And what areas do you serve, Brian?
Basically, BCL in my particular program operates in about 236 counties across the state.
Wonderful. Thank you. Thank you for joining us. Elaine, tell us a little bit about your business.
Yes, thank you so much for the opportunity to share and to be on the panel. And I just want to put my toe in and say to Mr. Hunter and my fellow panelists that I am a Navy brat.
Ah,
Oh, go
There we
Army,
go. See, Mr. Hunter, it's always the Navy's fault. See?
always.
My dad served 26 years in the Navy and retired as a Master Chief Petty Officer. So, yeah,
wow.
That's
can't
really
get
good.
there
That's really good.
if the ships don't take you. So, at any rate, thank you so much for the opportunity to introduce myself. Again, I am the founder of the Swan School of Protocol. As you mentioned, it is an etiquette training institute. I have the delightful pleasure to really work with these individuals who own their businesses. And the thing that's so great about this is that the folks who are our licensees, these are individuals who we are guiding them and helping to shape them so that they not only start off as solopreneurs, but they then turn the corner and begin to branch out and have a greater impact on their community, duplicating themselves, duplicating the systems and the processes that we have. So we're really thrilled about the opportunity that we're creating this roadmap for individuals to have that self-sufficiency as not only an entrepreneur, but then growing an actual business. And so watching this take place, and as we continue to add more and more licensees on board, we're seeing that we're having a really great impact on the community. I started out as an independent speaker and sharing my advice and doing workshops and seminars, but I wanted to create a company. I didn't want to just be, individual. I wanted to create a company, and then I wanted that company to grow. And so, as we all know, you're not going to grow unless you have that capital. And so that's why I had to really figure out exactly what to do and how to do it. And I'm thrilled to be able to share this today because I've done something incredibly unique with what most people would think is just a speaker business. It's no longer that. We also employ, a staff here at Swan HQ. And so we're contributing to our community here by being a job creator. We have just under a half a dozen staff members, W-2 employees, where we're really making an impact on the community and helping other lives as well. So I'm happy to share my journey and the things that we have employed in order to continue on this trajectory of growth and success.
Thank you. Thank you so much. I love that, paying it forward and giving back. That's beautiful, beautiful. And Brandon, tell us a little bit about your organization, your business as well.
Thanks, Shaylin. Thank you for the opportunity to be around so many great entrepreneurs here. And so, Roog is a web and mobile platform, and that allows shoppers to discover those unique products and services that are in our local communities. My inspiration behind that came from my personal experience. Number one, trying to shop locally in some of the cities that I lived in and support those businesses, but also from my professional experience. I worked for a startup for a little bit, and sometimes I would try to give them, different perspectives on to go into these communities and help them with some of their deliveries, particularly Black restaurants. And, even though I pushed that, there really wasn't that much of an effort to do that. And as I worked for this startup, I decided, once my time was up there, that I would work on my own projects. And I was doing it for a little bit, but really my first experience, my first job was with a Black business owner. He hired me in high school. And it was in that moment, once I was hired, that I told myself that I wanted to own my own business one day. And so I go back to small businesses in our communities because those business owners and those businesses are part of influencing our youth, right, in a positive way, to see themselves not, just as, someone that's doing one thing, but having the opportunity to start their business and get and build it. And so for me, Roog is kind of full circle, right? It's something that I didn't know what I was going to do when I was young. But then when we found the problem, which is in the digital commerce market. So, in many of our conversations within the Black community, we talk about the Black dollar and how it doesn't, circulate often or long enough. And that's the physical dollar. And now we have two markets, right? We have the physical dollar where people are actually still exchanging dollars, but now we have the digital economy and we're falling behind in that as well. And so we need to start to really think ahead to build platforms that will allow us to at least maintain what we have or to continue to pull back some of those dollars to our communities. So those are the influences that brought me to start Roog.
Well, thank you. Thank you so much. And if you have not already, you can definitely download his app. It's a
Download
great
the
one
app.
for
Yes,
sure.
yes,
For
yes.
sure.
Yeah,
I
we have it
told
for
you.
Android now.
Yeah. Oh, wonderful.
The web, yeah.
Wonderful.
So the web Android version. So it's not just on Apple anymore. So we're still working behind the scenes
All
to get
right.
it.
For those dying Android users, I'm still one of them. So for sure. Definitely. Hey, there we go. I have another one.
See? Yeah, yeah.
Well, I definitely wanted to make sure that for all the attendees and who are here and those who'll be watching as well, we wanted to have two sides of the story, the expert and those who have been helping these small businesses to create their business growth and their plans and what that looks like and the opportunities that's available, as well as business owners who've had to navigate those waters and what that looks like in various different stages. And so I'll start with our two business owners, and then we'll flip flop back and forth throughout our conversation today. So first, I will start with a hard but easy question. What was, you would say, the most difficult part of funding your business to start versus growing your business? And I'll start with Elaine.
Yes, it was easy to start my business. That's the easy part. I mean, for those of us who have that entrepreneur heart, we know that we leap. We leap right into it and get started. That was the easy part. The hardest part was to actually grow my business. And I went on a journey to figure out how to do that, taking different business accelerator courses. First of all, as a Black woman, I didn't even know that that was a thing. So that was the first and foremost. It wasn't until I decided to leave my garage and stop just working in the garage, going out and doing a speaking engagement, and then going back home and working from my garage. That's where my office was. I joined a women's co-working space so that I could network with other women, learned about business accelerators, continue to move forward and take them. And that's how I came in contact with Founders First. And so that's where I began to learn that, okay, there are some tools here in order for me to grow my business. And I began to learn from there. So really and truly, it's the growing part that was most difficult. And so after going through this program in particular, I have to tell you, I went through both the Elevate My Business and also the boot camp. And when I first came in, I had already been in business for over 10 years and was stagnant, but wanted to grow, was ready to grow, had this concept and idea of the licensing program, had launched it, but still hadn't figured out how to really, really make it grow. And it wasn't honestly until I went through Founders First that I learned that my stuff was a mess. And so I got what I needed and really fortified my business so that by the time I got my first investor, it was easy. All my stuff was in order. Everything was together and so forth. And so I have to say that the growth part was the most difficult for me, but now I'm in position and I am absolutely prepared, and I have the choice to take on the different growth, financial capital, the capital opportunities that are available. I'm in position to take those on.
Great, great. Look forward to hearing more on that for sure. Brandon, what about yourself?
Thank you. So the easy part was starting the business, getting the LLC and all of that. But I was moving into technology. And so part of me going back to school was to kind of get a better idea of how to do that. My background was in supply chain. It's in business. I work for Unilever and everything. So I had some e-commerce background, but building a product was different. So that was, I think, the first thing would be getting the right team. And what I was able to do through some accelerators was that I met people and ultimately formulated a team of 6+ people. That to me was a big challenge, and those accelerators, my master's program helped with that. And then the second thing I would say, and this goes back to what Elaine said, is the growth. And that's where we are right now with our product. We have our MVP out. We have a simple product out that we can enhance as we get feedback. But now we need to grow that user base. And that's where we are. And that's what I'm seeing, which is even more challenging than building a team. It's getting these users on board, bringing that value add, and then keeping them, keeping them engaged, right? So that's a whole other aspect of it as well. And so those are the two areas I would say was building a team, finding the right people who align with the mission and could bring the skills we needed to build the product, and then also growing the base, right? And that goes back to what we are talking about right now, which is the funding. That is necessary to grow and market and bring on the sales team. So that was my experience over the past few years. And the accelerators helped out a lot. The master's program at UT, Macomb School of Business, helped me out a lot. And also the network that I was able to build in the entrepreneurship community. I've met so many people, and there's a few I talk to more often than others. But whenever I go back to Austin or I go to Harlem, New York, I can still connect with those people, and they're out here. They want to support us in all of the businesses that we're doing. So that's been my journey. But those were the tough parts for me, was building the right team, and that right now growing the user base.
Great. Thank you. Okay. So now you've heard from our two businesses on their startup journey versus their growth journey, where they are now. And we'll talk to them a little bit about what types of capital and funding that they are using to help support that growth and what that looks like. But I'll go to you, Brian. When you are encountering a number of businesses at a variety of stages, how are they to know where to go? Or how does BCL kind of guide them into the right steps when it comes to funding their business?
Yeah, good question. That's a good question, Shaylin. So I work with about 400 or 500 businesses across the state annually. So now I've been in BCL for 6 years, so I'm on number 3,700 and something, right? And then from my previous career, it's thousands. So the bigger challenge, you hit up on it, is really I study a lot around the psychology of entrepreneurship and understand a lot of the nuances of entrepreneurship. So to answer the question around how do many stumble into it for some instances. So depending on the type of business you're starting, can be an issue. Sometimes it's just simple as Googling it and getting started. But then the bigger challenge is what we're going to discuss here is the access to capital piece. But I am going to make a caveat when I work with businesses starting out, and I've sat in and on many pitch competitions where it's tech. I've actually been a judge, I think, for quite a few years on the Elevate My Business and coming in. So I always say this. Access to capital, from a BCL perspective and my perspective, is a symptom of a root cause of some other problem, right? So I'm going to say that again to the audience. So access to capital, because sometimes just because you want money doesn't mean you need it, right? Elaine talked about, hey, when she came in, hey, I was a mess. And sometimes, wait a minute, giving you access to capital, if it's a hot mess begets hot mess, and you're still going to be a mess. So access to capital is more about, from the lender's perspective, what do you need it for? What's the root cause in the early stages of whether it's Brandon's business or Ms. Swan's business? Then many times the lender, like myself, are looking for two things because, hey, let's face it, at the end of the day, the clock's ticking. We're going to be at a failure rate at some point where it's still 50% over a course of time. Not all are going to make it. So the access to capital piece could be, it's a false start. You have created a product or service in a market that simply does not need it. Therefore, you are then asking for access to capital across any of these platforms on the capital stack just to keep the dream alive, right? But there's no market. So therefore, it's just your burn rate, you're going through it, right? The other one could be, and that's called a false start. You could be a false positive. You've started the business, got a little traction, and we think we're off and running, but you've oversaturated the market, meaning it's going to be what it's going to be, right? And here we go. We need more capital or access to it to either create another product or service because we've capped off in the business. We got a great start, but it's done, right? Now to keep it going, we've got to shift to another product or service, right? which requires that access to capital. So that's usually how we're looking at it across the board. And then for most businesses, if you're a startup, we're going to talk about this a little bit more, is we're always going to say, hey, make yourself as bankable as possible to that investor or lender. And another note, when we get further into this, know which one you are talking to. So if I'm sitting at a pitch competition and Brandon's giving, and it's a tech-based, right? That's great for an investor, but I'm a lender. I want my 150K back on at 8% interest in the next 36 months, period. Great if it takes off. I'm not looking for any more than that. And the lender is listening for different things, right? The investor may just be listening for, your growth rate, how much revenue, but the lender is listening for, which is my favorite word, profit, because where do you think my loan payment's getting ready to come from? So, right? So we've got to understand at these different phases and where we're at. And final piece, there's growth and then scale. And make sure we talk about that a bit. Growth to a lender is you got to throw a lot of money at it, right? It's going to hurt. It's because it requires a lot of assets. And most entrepreneurs are pre-wired to see the forest for the trees. You see it in bright colors. Can't you see it? And you're just trying to get there, right? And then, but the lender goes, well, I see your forest. It's all these daggum trees in the way, which is all the risk, right? So then it gets into scale, right? Think big, but start small. Move fast on what's in front of you. And in many instances, the approach from some of the entrepreneurs to the lender is, I want to go big, right? Well, wait a minute. You want $50,000 for assets for a business that's only done $1,200 in revenue over the past since May. True story, and it was a tech business. This week. So hopefully that gives you some perspective on it.
Yes, it does. Great insights. I love it. I'm seeing the notes in the chat here as well. Excellent points. And we're going to follow back around with all of these. Hopefully I don't know if we have enough time to go through all of the information that we could. Each of the variety of different types of funding could be a webinar all on its own for sure. So I definitely want to go back to our business owners as well and talk to us about what type of funding and capital did you use to start your business and to grow your business? And we'll start with Brandon this time.
Awesome. So, I'll start from the beginning. When I first started with the concept of Roog, I bootstrapped. So I took money from, when I left the startup, I had a little bit of savings from my work. And that's when I started to kind of build out Roog, start to do the design. And I didn't have that much. So when I ran out, I still worked on it. I was still working part-time here and there and putting money into it. But I was able to connect a year later to a few angel investors. So my first method was bootstrapping, and that's with my own cash. And I really didn't go to friends and family initially. And then I connected with an angel investor, and I was able to, pitch it, and they liked the concept. This was an investor of color, so they could identify with the pain and the problems that we face in our communities, particularly with small businesses. And so I was able to get enough to design and start to build out the product. But then I started to realize that there's so much more I needed. I couldn't do it by myself. So I did the bootstrapping. I went to an angel investor. And then during some of that time, I took a break trying to figure things out. And some of my friends and family helped me out a little bit. Right. So those are three different ones that I've used up until that point. Now, when I got to the point of where I realized I needed a team and I had kind of reached my limits of what I could do myself, that's when I got the opportunity to go back to school. And through that, I started to enter into pitch competitions. And so from UT into the TVL Accelerator, Mass Challenge, those accelerators either got me a little bit of funding to continue to build and refine the product and the design. I was able to bring my team on board to help with that. And so right now I'm saying I did bootstrapping, angel investing, and then I started with pitch competitions. And of course, Founders First was one of those pitch competitions, in which I won some funding to keep us going. And then I got into since I'm a veteran, I applied to the Bunker Labs Veteran in Residence program. And this was a 6-month program, but during it, I got the opportunity to pitch at the Mustard Pitch Competition. And through that, we got a $15,000 grant that allowed us to continue to build, which is what you see now, which is a mobile and web product. The mobile product was more expensive, of course, but ultimately we have a full basic product where people can access it, not just in the Apple App Store, but also on their web and mobile. And so we went through bootstrapping, angel investing, friends and family, pitch competitions, accelerators, and then through the veteran and residence program, that was a grant. So I think I've touched a little bit on all of them so far within raising funds for Roog. Now my goal was to raise $250,000. So far I've raised about 145, right? And so I knew through my initial research, not knowing too much, that 250 for any small business was pretty solid. If you can get 250, you should be able to build out a simple product, or, whether it's, tech or not, but that should be enough for you to get something out there and prototype it and get the feedback you need. And so what I'm proud of is that I've done what I've done so far with less than that. And that surprised me. But I've gone through most of the channels. Now, the only channel I haven't gone through is the VC funding. Now, I've talked to VCs, but they don't really require, but they're a little bit more particular about when they invest. Because of the social, the racial reckoning and all the injustice that are happening, you're seeing more people pouring dollars into VCs, Black-owned VCs, minority VCs. And so, I'm assuming that in the next 6 months or a year, I'll probably end up entertaining them at some point, but that's a whole nother space to get into. But I think since my journey, starting in 2017, a VC is a venture capital firm. And so a VC pulls all the dollars from other investors, and then they're responsible for investing in the right startups. Somebody asked that question below. But that's been my experience since 2017, all the way up until now, just navigating, educating myself, building my team, and pulling whatever I could based on what was in front of me. A lot of these resources I didn't know about initially. I learned over time through friends and through people who I network with. And so, the timing for me was pretty good. So I've checked the boxes in many areas on that.
Right. That is a very interesting journey that you're on. And I know you're still on that journey for sure.
So
that's beautiful. Thank you so much.
Yeah.
Now, Elaine, how about yourself?
For myself, I started my business in 2003, and I started out bootstrapping as well. Just took the leap, jumped in with the resources that I had, and then continued to move forward in the business. When I a few years later, I got married, so I dove into my husband. We tapped into the resources that we had and continued to add to the business. Once we got to the point to where we began to grow, I started to take out microloans. There are lots of different loans that are available for businesses. For example, we had a very steady cash flow, and PayPal had an opportunity called PayPal Working Capital, where they fund you a specific amount and then they take their funds back through every transaction. And because we had such a high volume of transactions going through, that really helped us in a number of areas. The other thing was, then I did a crowdfunding campaign as well. And that was very, very helpful. It was one of the things I had learned about as I got involved with the co-working space for women. When I didn't even know that was a thing, again, crowdfunding. So we did a crowdfunding campaign to raise money. Once I did join Founders First and went through the process of both the Elevate My Business and also the boot camp, and I became more fortified from a financial perspective to where I really had a clear vision on what our key performance indicators are, and our balance sheets were really on point and so forth. Because going through Founders First helped me to see where I had a deficit. And so I found an accountant, and I didn't even realize there's a complete difference between an accountant and a bookkeeper, right? And so we got to the point to where the great thing about this organization is that you do that financial checkup. And that's why I learned that I just wasn't getting the proper reporting for my business to understand what was working and what wasn't working. So because of that, I was able to get myself into position to then start applying for grants and being able to answer the questions that are necessary easily, readily being able to do so, that led me to the opportunity to get an angel investor. And it was quite serendipitous the way it happened for me. I was at a speaking engagement. I was at the front of the room and people were taking questions at the back. And one of the gentlemen who happened to be an invitee there raised his hand and said, "Do you have an investor in your company?" And I proudly said to him, "I do not, but I am absolutely prepared to take on an investor." He said, "Well, let's talk afterwards." And we exchanged cards. And he was the first investor who came on board and has really helped to guide our company and also be a mentor to me as well. As Mr. Hunter mentioned, with the reckoning of what's happening in our country through the illumination of the racial injustice that's been present all this time, a lot of companies, a lot of organizations are putting forth an effort to do what they can by putting their dollars where they work. And so I make it a point to go and apply for grants available because I mark off a few different blocks. I'm a woman, I'm Black, I'm also Latina as well. And so I take advantage of any of the grants that are available. So we've definitely done the grants. I had some little notes here. So we just did something recently last year. We also did a round of investment for friends and family, where we set aside a certain number of shares in our company that were available for folks to make an investment in and purchase shares. And so we did that, and we were able to raise some money for a very specific marketing purpose for us through that. And so that we did that through friends and family, but we did it with shares, very small amount of shares for the company. So that was really a great experience. And I had a mentor that kind of took me through that process so that we did everything well and properly. And so that was our first time really going outside of my own household and folks who had a business, interest in me to get that particular type of funding. We haven't gotten to the point to where we're going to start to entertain VCs just yet. We're getting ready to launch something very new, and we have another angel investor who is very interested in this particular pivot that we're making. And so they're ready right now. We're just in the stages of development, the early stages of development and so forth for this next stage for the company. And one of our investors was able to bring on another individual. So we're looking forward to that sort of thing. So we've used it all. And also everything that the SBA has offered as well. We were able to get that EIDL loan, and that was great. Of course, we did round 1 and round 2 of the PPP, but that was really to help us kind of survive through the process. But being able to make sure that we, getting that SBA loan, which we know, of course, Mr. Marshall, that's challenging typically outside of COVID. So I appreciate what the Small Business Administration has done for businesses, because those loans are generally not easy to obtain, and we were able to get one, but we wouldn't have got it if our stuff wasn't together. So I'm thankful for that. So again, just like with Mr. Marshall, we've dipped and dabbled into quite a few different areas, and it's proven to be very helpful for us.
Well, thank you for that. Yours is definitely a fascinating journey as well. This is so astounding to hear the variety of options that business owners encounter to fund and support their businesses.
I would like to say,
go ahead.
Can I say one more thing?
Yeah.
So Lane reminded me, we did apply for the PPP loan. We did that too. So that was another one. And then we are actually working on a crowdfunding campaign with another entity right now called Ignite Social Impact. And, that's been a new phase for us because, before you do that, you got to go through a financial review. So now I'm going back and pulling all these documents. I'm seeing everything we've spent since we've been incorporated, and even the incorporation aspect, right? One of the things I learned is that if you're taking on angel investors, they prefer for you to have your company to be more formed and be able to distribute shares. So, C corporation versus LLC and things like that. And so these are all things that play a part to some extent in terms of what investments you receive as well. And I think that some people sometimes don't understand that, is that, you know, sometimes you may have to shift the organization of your company to entertain some of those higher net worth investors.
And I'm gonna
That's
chime
so
in with
true,
that as well.
That's
Yeah.
so true, Mr. Marshall, because I started out as a sole prop and then did the LLC and then did the C Corp because I was, you know, going into this journey. So, and we're talking since 2003, so that it's a longer journey, but yeah, sole prop, LLC, and then the C Corp. And that C Corp has been incredible because it's really put us in position to where we can do more and have those higher level conversations.
And let me chime in here. Ms. Swan's been very transparent. And I mentioned this on a call yesterday. Ms. Swan is a good example because I always say this: hot mess begets hot mess. If you are a hot mess coming into it, you're gonna be a hot mess altogether. But what she was transparent about is she pulled it together, right? So when a lender's looking at a potential business, Mr. Hunter, you mentioned it as well. Part of the hot message, if you don't know your numbers, I asked you what your revenue was, and you're going to sit there and tell me what your profit margin is. You just told me you don't know what the heck you are talking about. Ms. Swan brought up a good point. No, it's about knowing the financials, right? And understanding, hey, what's the difference between a P&L and cash flow in the business, right? Ms. Swan can get that purchase order or that contract that's got a 40 wait, but they're not going to pay her till it's 45 days, right? But if she's spent, and so the business may only bring in $20 a month, but she's spending like a drunken sailor $120 a month, she's just caused a cash flow problem, right? And then says, well, I got an accountant, right? And so I always want to put that out there with all these, regardless on the capital stack or where you are. Hot mess begets hot mess, meaning if you don't get your numbers right, that's a hot mess to an investor. That's a hot mess to a lender, right? So I always like to put that out there. You can can that one if you want.
Thank you for that. We got to put hashtag don't be a hot mess.
Yeah, don't be a hot mess.
You'd be surprised how often it's more real. It's very real.
Oh, which leads me to ask you a question as well, Brian. You mentioned about a business being bankable and being able to speak the language of who they are talking to. Where does someone go to find the experience or to even know how to get into the different avenues of funding, whether it's talking to an angel investor or a VC? Elaine mentioned just being in the right space, just happen to encounter someone. Does that happen often in the ecosystem, or how can businesses be involved to put themselves in that position?
I think just getting engaged and getting out there. First thing they can do is understanding the pecking order of banks. You have a slide that kind of shows how that flows, major banks all the way through. So for most startups or most then it's more of the major banks, JP Morgan Chase, Wells Fargo, Bank of America. If you're just starting out, they're not going to touch you with a 10-foot pole, right? Because you are Mr. Hunter and Ms. Swan at one point had the big R of risk on their foreheads, right? Right? So,
yes.
Yeah, so the routes, where do they go? Yeah, they can go to, friends and family, things of that nature. So then if the banks don't take you, then where next? You had something in the slide around micro. Okay, then that's the first community bank of, right? And you're going that route. But then they're not going to touch you because Ms. Swan and Mr. Hunter still got the R of risk on the forehead, and really not even 2 years of history of what I like to call economic behavior in the business, meaning the business hasn't gone through 2 seasons to understand seasonality and show economic behavior, which is more around profits, revenue, cash flow, seasonality. Ms. Swan probably has a lot of seasonality in the business. December comes around, we can talk diversity, equity all we want to, but we're doing it around the Christmas tree in Turkey, right? And so she's understood that. So then after community banks, Now you're at a BCL, a community development financial institution that's certified by the SBA to do small business loans to low, moderate income, Black and brown communities, right? So where do they normally go? Most of Ms. Swan and Mr. Hunter mentioned it, the SBA, they'll all guide you to the major institutions that will lend the money. But then bankable, let's hit on this while we've got a few minutes. Here's what that means. So bankable means a couple of things. First of all, you guys got to know your credit score. So all lenders, doesn't matter, it starts with a credit score. There's a range, but everybody, doesn't matter, starts at about 640, right? No bankruptcies. So you have to understand that piece first, because they're going to be looking, remember I said hot mess. If you got jacked up credit and you never took care of it and you come in with a 480, right? It's going to be a mess on the other side. The next two are the most important when we look at, okay, we're going through, what do we need to look at? It's capacity is what I call it, capacity and capability. It would be, Mr. Hunter, can your business afford the loan, right? So this is where Ms. Swan talked about understanding the financials of the business, right? So back to that true story. Well, wait a minute, you've only done $1,200 over the past, since May. That's only about $240, $280 a month, right? And you're asking me for 30. That's about $1,000. That's well over $1,000. Do you understand this business is going to be, it doesn't make any money, and we don't want to bankrupt the business. So can the business afford the loan? And that's getting into the financials, understanding the profits. Mr. Hunter mentioned this, as you go further up with investors, yeah, they're wanting to see more of the structure of the business financially. Is it stable, right? They don't want to see, who wants to put money into a business that's burning through cash flow like it's, yesterday, and the business is not profitable? It's not going to grow. Then the next piece of this, and mainly we see this with tech businesses. Remember, lenders are more risk averse. We don't like risk. Remember, just give me my 100K, 50K at 8% over 36 months. Great, right? So that would mean for business, it's called collateral. So Mr. Hunter may have a tech business, right? And you're asking me for 100K. Well, it's called a secured loan. Lenders, and when you're looking at the capital stack and you move through from a lending perspective, especially lending institutions, big banks, CDFIs, right? Community banks, then they are dealing with secured loans. If you're asking for 100K, what do you got that's worth 100K? Because that's what the lender's going to seize. And yes, BCLs had BMWs, right? Took us forever to get rid of this ambulance once. And one time, we only did it once. We used a racehorse as collateral, but it was a prize racehorse worth a lot of money, right? So normally, as you go through and look at what you need, Ms. Swan's mentioned a lot about these different phases, and Mr. Hunter has as well. Remember, when it comes to your major banking institutions, it's about credit. More than likely, can you afford the loan, right? And then it's collateral, dollar for dollar match, right? So that's what you should be looking at. And then where do you go? How do you find us? Well, most of the time it's in the education institutions like SCORE, the small business development centers. If you are in some of the, incubators or accelerators. In Dallas, there's Impact Ventures with Ben Van. He'll lead you to, since he's integrated in most of these, he's following what is called now an integrated capital model, which is almost like the capital stack, where, hey, it follows a certain path or model through it. So hopefully that helps kind of laying that out, is how do you get to us? we're right there. You can start mostly with a community lender. And the only thing I'm going to say, the difference between your community lenders and what you need to understand there is not all of us, while we do the same thing, our tolerance for risk is different. So one community lender will take Miss Swan, right? Because, oh, they just love her. She's got a great personality, and they'll take that risk, but they're going to charge her, 15, 16% interest rate, right? But they'll give her that $10,000 loan, right? But she's at a 600 credit score, but they'll do it, right? Then you've got a BCL and some of the others. We don't do volume loans. We do about 20 loans a year, but they're big loans. They're huge, right? So that's why you have a consultant like me, because I'll come in and pick apart the business and to say, okay, this doesn't make any sense. So, but you get a better interest rate. We're running 8-10%, and that's better than you can get. But so understand that many times it's about the risk tolerance of the lender. So most of the time, regardless of where you're at, New York, wherever, the CDFIs, the banks really try to work together to say, hey, I've got this great lady who's got a great etiquette business, not right for us, but she's right for you. And we try to then communicate and say, hey, go to this person, those kind of things. So hopefully that answers a lot of your questions. I'm trying to fit in where their journeys are going and try to weave some of this in.
Yes. Thank you for that. A lot of good information. And I told you guys we would probably run out of time. We are pretty close to running out of time for sure. There's such a wealth of knowledge and information. Something I've heard from each of you is there's a lot of information that's out there. There's a lot of access to education and resources. And for some business owners, it can be a bit overwhelming and not sure where to go and who to find out. And Elaine, you had mentioned a mentor, and Brandon, you mentioned accelerators and experts like Brian kind of helping you to guide that. So don't be afraid to ask for help to support your business in the stage that it is in, for sure. And a question I saw come through in the chat, I definitely want to make sure we get in is, as your business is growing, between Brandon and Elaine and all the businesses that you encounter, Brian, who've done pitch competitions, they're getting a lot of good press. They have a lot of acknowledgement for the work that they are doing. How do you leverage all of that good media and PR to support your growth of your business and turn that into actual capital?
I'll speak very briefly. I use the media a lot to grow my business. And how do I turn that into capital? I'll tell you. Aside from the things that you read at the beginning, I do a lot of television. I go on different local news shows and also national shows, whether it's local news, Dr. Oz, CNN, Access Hollywood, and so forth. So I use that media presence to solidify myself as an expert in this space. And then I intentionally go to brands, and this is where this is not a traditional way of capital, but it has kept this company going for years. And I specifically go to brands and offer myself as an expert so that I can be a brand ambassador or a spokesperson. And I do very big deals with very big companies where they pay me a lot to talk about their product, either on television or through interviews. And I've worked with major brands, and so I work as a spokesperson, and instead of them paying me directly, they pay the company, and that's what keeps us going. So that's how I use the media to generate revenue.
That's great.
I'm in talks right now with two really big brands right now that we'll be able to take on, because the holiday season is so great for this industry when you talk about gifting and all of this and so forth. And so I've been able to take my niche and be a voice of authority, and then use that in partnerships with brands. But that's a whole other conversation. But when you talk about major corporations who will pay you know, I can, of course, cannot say, but we're definitely in that six-figure range for us, you know, to be able to speak on their behalf, you know, for a year-long campaign or what have you. So it's been really, really great for me.
Wow, that's great. That's great, Elaine. I'm gonna have to pick your brain too, so I can figure out how to get myself on a larger platform. So far, we have leveraged our personal networks, and that's through UT, the McComb School of Business. We're working on probably pushing some out to their magazine, hopefully in the next few months. Being in Dallas, Dallas Voyage has written about us through some connections there, and people recommended us, which is good because they see us as a brand that is helping small business owners. And then outside of that, we use social media because we have been bootstrapped. We don't have a lot of funding. Even though marketing and sales is so important, we've just leveraged our time and the people that we have to continue to promote the businesses and promote our journey so that we continue to grow our user base. Now where we are is that we're now working with a few other entities. One is called I Like Marketing Group, and we're going to partner with them on helping to help promote small business incentives. So not really promoting it for us, but help using our platform to promote for those businesses through our partnerships that we're forming. And so what I think is that we're at the beginning stage of where Elaine is. So I'm hoping that we can get to that six-figure mark at some point, but we've mainly used social media. We've used our personal networks. And of course, one of the things with small businesses is that there's still there's a lot of weight on word of mouth. And so that's something that we're still trying to, number one, use, but also figure out a more efficient way to get the word out to some of these communities as well.
That is wonderful. Oh, I wish I had more time to talk to each of you for sure. So
Yeah.
I definitely want to highlight some of the key things that I have heard everyone talk about. And as a reminder for all of our attendees, this webinar will be available on our foundersfirstcdc.org, as well as more in-depth webinars and information on the various types of capital funding, from revenue-based financing to venture capital to what does it look like when your business growing, what does it look like to scale your business, all the different varieties, number of topics. And so there's no lack of education pieces that are out there for you. So a few things I want to highlight is that I heard from our conversation is to be involved in your business community, in the ecosystem that you are in, whether you're in Texas or Boston. I see people from Massachusetts everywhere in our chat here. Get involved in the business community ecosystem that you're in, whether that's attending events, connecting with like-minded business individuals, so you can be in those spaces when they're having those conversations. Another good point that I heard as well is your funding options can be available to you based on your affiliations or the backgrounds that you may have, the schools that you're involved in, the former corporate background that you may have had as well too, may be a good segue or option for you to fund your business. Also, I heard in our conversation as well is just because you want capital doesn't mean you're ready for capital or you need the capital for sure. Take a look, an honest, transparent look at where your business is and what you need to move to that next level. You may just need to, as Brandon mentioned, take a break, sit back and look at how you may need to pivot or adjust to serve the needs of what your vision is in your head. So all great points that I've heard as well. And I know that all of our attendees will follow you each on your journey as you grow. BCL of Texas, thank you so much for joining us as well. Brian, Elaine, Brandon, as we are wrapping up, any final words you'd like to give to our attendees as well?
I would say that if you are starting a business, do your research your market. It's okay to pivot. You're going to have some moments where you may have to put it down for a few months or whatever. I actually tabled Rook for a year while I was working. And to see that where we are now versus back then is a blessing, but it also shows that, there's a lot of opportunity out there. So do your research, be persistent, and be open to that constructive criticism that people are going to give you. There's a lot that we don't know navigating, but with the right people around you, you can do some things. So just keep that in mind.
I would say don't go at it alone. Don't do what I did initially, which was to work in my garage, go do a speaking engagement, and then come back and not connect with anyone. It wasn't until I got out and started to connect with other people in the business community to where I really started to see exactly what was available to me for my business growth. In addition to that, in terms of going at it alone, there are so many resources available for small business owners that are absolutely free. Get involved with your Small Business Development Center. There is a wealth of information and courses and classes and connections you can make. Get involved with SCORE. Look for things that are free or low cost. And in addition to that, take advantage of any business accelerator that will help you get yourself into position to really start to look at your business from a business perspective to help you grow. So do not go at this alone. Don't stay by yourself. Talk to people. Don't be afraid to share your ideas with everyone, with other people. It doesn't have to be with everyone, but share your ideas with people. I often say there's a McDonald's on every corner and they're all making money. So don't be afraid to share. No one's going to steal your stuff because there's only one you. So keep that in mind. And finally, build what I call your own personal board of directors as you're growing up. And what I mean by that is to get some people in your life that you can run some things past, that you can talk to. It might be your pastor or a good friend or someone that's a coworker, just someone who has a sound mind, who can listen to some of the ideas and give you that sort of feedback. So don't go at it alone.
Finish out with simple statement. Continue to think big on your ideas. Start small, right? Start small. Mr. Hunter mentioned it, proof it out, right? And move fast on opportunities in front of you. Ms. Swan mentioned it, take advantage of opportunities of SCORE accelerators, move fast on those opportunities. So I'll close out with think big, start small, move fast on those opportunities in front of you. Thank you.
Thank you so much. And thank you to all our panelists for taking the time to speak with us. Thank you for all of our attendees for joining as well. And I know we're a little bit over time, but I would be remiss if I did not offer up an opportunity for business owners in the region as well. It's offered by Founders First CDC. It is our Job Creators Quest grant, and BCL of Texas is one of our partners as well. It is a grant for $60,000 for 20 businesses in the state of Texas. And it is paired access to capital as well as access to a seat in our accelerator program. So education and funding together. So make sure to go to foundersfirstcdc.org to find out how to apply. And this grant opportunity will be open in multiple regions throughout the year. So it's here in Texas now, but it may be in your community next. So make sure to follow us, subscribe, like, share, and keep in contact with each of our business owners and your local ecosystem and business support organizations. So thank you all for attending our Business Essentials webinar. Look forward to seeing you next month as we'll have another exciting topic. So tell all your friends and business owners to join us. So thank you all for attending.
Thank you, Shaylin. Thank you for the opportunity. Brian and Elaine, it was great to meet you, and I will follow up with you very soon.
It was my pleasure.
Thank you.